Hey everyone, this is Brandon Rush. Thank you for joining us for another episode of The Agent Investor. The goal of The Agent Investor is to keep our audience informed and help them make decisions in their business when it comes to commercial real estate and multifamily through conversations with professionals who are in that space and field as well. Today, we are welcoming a guest speaker, a good friend of mine, Tom Polowy of Insure Connecticut. Tom is a good friend of mine who I've met years ago through all various channels here in Connecticut through different meetups and events that we attend. And now he's a sponsor of my meetup. We are regularly in touch and all that good stuff. So, Tom, thank you for joining us today.
Thank you for having me, Brandon. It's been
Absolutely.
way too long. Been looking forward to
Yeah,
this.
I know. So, we're going to jump right into it. So, tell us about yourself, background, how you involved in commercial real estate. Give it to us.
Sure. So I focus on financial services. I've been doing financial services and insurance for over a decade now, which is really hard to believe. And
Mm,
real estate is always something that's been adjacent to what I've done. I do have one investment property, so I'm not a huge real estate investor, but I recognize and appreciate the opportunity that we have here as Americans in real estate. I don't like a lot of people say, it's a unique opportunity to live here, but that's definitely one of the very unique things about living in this country is that you actually can assess wealth or gain wealth by purchasing real estate, and that's accessible to every person that
hmm
lives in this country. So that's always got my interest in it, and obviously doing insurance, I work with a lot of real estate investors, and that's a whole different ballgame than somebody might be used to their homeowners insurance or auto insurance. Working with or being a real estate investor and looking at the insurance side of things of their portfolio, I find that a lot of real estate investors actually don't even look at that, and the coverages are completely different. So they might be used to one thing on their personal side, but
hmm
making sure that you're properly covered on your investments is completely different terminology, verbiage, and pricing, if that's a
Got
word.
it. Yeah, absolutely. And I know you're involved in multiple businesses. Tell us, I know you're in Insure Connecticut, but you're kind of a holistic approach to how you operate. Tell us a little bit about
I
the
do.
businesses.
I do. One of my philosophies is trying to provide as much value to every single client that I work with, whether it's on the insurance side, and I also have a wealth management firm, WA, Wealth America. And I've been doing that for actually longer than I've been doing insurance. So I
Nice.
am a wealth manager, registered representative, fully licensed. I have an insurance agency. I'm also an Insurtech founder, and I'm also working on creating a podcast studio. So I do stay busy. I see everything as you mentioned. You use the word holistic, and that's a great way of phrasing it. It is holistic because they all interact. It's not like it's
Absolutely.
one of those things is completely different. They're all. My vision is that they're all going to have they're all interconnected. The way I see wealth management and insurance are two sides of the same coin. You can't
hmm
really have wealth without making sure that you have the insurances or the risk management to protect it. And the more
Sure.
wealthy you accumulate, the more insurance you need. On the Insurtech side, I'm a part founder of a technology company. We're building insurance technology products. So selfishly, that helps me and my agency work more efficiently, and hopefully, we're going to have a go-to-market product by the end of 2025. And then the podcast studio media space, obviously, same thing that you're doing is being able to
Yeah.
promote my business, promote other people's businesses, and helping me grow along with helping my friends grow at the same time. So it all works together. It keeps me busy. It keeps me off the streets. Those are my hobbies. Like
Got it.
some people play video games. My life and my business and my career is my video game. These are my
Yeah.
level ups. Like for example, being on this podcast, that's an achievement, and that's going
Yeah.
to make me feel great, and that's going to drive me to work harder and catch up to what you're doing on the podcast side, for example. So it's great
Yeah.
also to have people around you that are doing these great things that we could feed off of. And I live off of competition, rightly or
Yeah.
wrongly. Like I get juiced up by competition. So for example, like
Mm.
when I watch your podcast occasionally, because you also we know a lot of the same people, so you have
Yeah.
a lot of our mutual friends on your
Yeah.
podcast, and every time I look at that, it's like, why am I not on there? Why am I not doing that? Or if I see a friend of mine do a real estate deal, well, why don't I have more real estate investments?
Mm.
So it drives me in a very positive way to learn from everyone around us, and then
Yeah.
keep trying to excel and help others to excel as well. Because it's
That
more fun
well,
when we do it together, right?
yeah, absolutely. I was gonna say, well, congratulations, you made it. So, first question I have for you:
Yes.
if an investor is just getting started with commercial or multifamily properties, multifamily probably meaning 5+ units, what are the first insurance related steps they should take to protect themselves?
Know what you're getting yourself into. And
Hmm.
you and I both know that a first timer going into purchasing their first investment property, they have no idea what they're doing for the most part,
Yeah,
right?
yeah,
They don't know about the real estate investment business, so they're
hmm,
sure as hell not thinking about the insurance side of things.
yeah,
And you and I know if the insurance isn't right, the deal could fall apart,
hmm,
or you could lose your property very quickly. Or if we have a natural disaster or we've had some hail, that could turn into tens of thousands of expenses that you did not account for because it's your first time doing it. So my
hmm,
what I would say is the best advice I could give anyone is develop if you're going to be a serious real estate investor, develop a relationship with an insurance agent that has access
hmm.
to markets of the space that you're looking to invest in, and have a sit
Absolutely.
down. Take them out for a coffee. I'm a coffee guy, and have a conversation. Take an hour, have a conversation with them. Find out what you need to know, and also
Hmm.
use a lot of the resources available to us. Use AI to generate some questions that you may not even think about. So
Hmm.
that's one of the best things that they need to do is understand the differences between your homeowner's insurance and what real estate investment insurance looks like, different
Yep.
kinds of coverages, and what are the risks that you're exposing yourself to by not getting certain coverages. And with every single deal that I do, there's always coverage gaps, and there's just you have to weigh a balance of the pros and cons of price versus coverage versus what my cash flow is going to be at the end of the day. And it's
Mm.
never going to be perfect because nobody wants to overpay, especially for insurance. I mean, let's face it, nobody likes insurance.
Yeah.
Nobody cares about the insurance side of things. People leave it to last, but that's also why a lot of deals fall apart. So when you're getting into this,
Mm.
have a sit down with an insurance agent that deals with real estate investors,
Yeah.
and pick their brain, learn what you need to know before going out and putting in offers.
Absolutely. Yeah, that's a good point. One of the part of my process is before we even get into due diligence, have those conversations with your insurance broker way in advance because the last thing you need is to go into contract, you pass due diligence, and now you're exploring insurance just to find out this is either uninsurable or the insurance is 3 times what you thought it was going to be, and you can't back out of your deal because you're past that point. So insurance, like you said, and I think a larger part of it is establishing your team, and your insurance broker is part of your team that you
Yeah.
establish before you even get it. You started. In addition to your attorney, your uh, agent, and all that kind of good stuff. So absolutely having that conversation up front. And like you said, it's a general question because it's really what to protect yourself from is really relative to what you're getting into and what
Yep.
all that stuff. So really just start with the conversation. All right, let's keep going here. So when it comes to property insurance, what aspects are often overlooked or ignored by landlords and investors, which it ultimately increases their risk?
There's many. So I'm going to
Mhm.
focus only on two today.
Sure.
One is the vast majority of commercial real estate insurance policies. There's a percentage assigned to how much you're covered for, and it's usually 80%. A lot of investors don't know that, and so you could have
Mm.
80% of the reconstruction value, or you could also have 100% of the reconstruction value covered, and um, ironically, if you get 100% of your reconstruction value covered on the insurance policy, you actually might have a cheaper premium. But there's some risks associated with that. Is that you have to calculate what the reconstruction value of that building is accurately. Otherwise, if there's a claim, you might get penalized with additional premiums when they audit your policy. So that's why the
Mm.
most common is 80% of the reconstruction value, which is actually a higher premium, but you have more leeway in terms of the accuracy that you have to have on the reconstruction value of the property.
Got it. And with that 80%, does that mean if you had a complete loss that they're covering 80% of the replacement? I don't know. I'm just asking generally. Is that what that means?
Yeah, so you have to make sure that you're within 20% of the full reconstruction estimate of the building. And that's
Got it.
become a lot more difficult nowadays since the cost to rebuild things has skyrocketed, which is also
Mm.
why a lot of people are getting sticker shock when they're getting renewals or shopping around for new policies, especially for commercial real estate, because the price to rebuild a building and the labor have skyrocketed so much since COVID.
Didn't even think about that. Yeah, no, for sure. And you said there
So
was
that
one other. Sorry, go ahead.
so
Sorry.
so, so the easier path is going with the 80% reconstruction estimate versus the 100%, even though the
Yep.
100% would provide you with greater coverage.
Got it. Got it. Okay. Oh, got it. And just to dig deeper into that for, another 30 seconds, just so I'm understanding, the 100% is less beneficial. It sounds like it's maybe less beneficial to the provider. That's why ultimately it may cost you more versus 80% is,
You know
you know what
what?
I'm asking?
Yeah, I do, and I would say I can't speak for the carriers, but
Sure.
my assumption would be that they would actually prefer the 100% because that it is a cheaper premium, but to
Mm,
get that accurate, get that number accurate is a lot more difficult.
got it. Understood. Got it. Got it. Okay, cool. And you
Spe-
mentioned it was something, else that yeah.
Yeah, so this is something I actually brought up during the last NEI meetup,
Mm,
is the importance of requiring your tenants to carry their own liability insurance.
mm,
Not doing that to me is akin to driving without auto insurance because you're exposing yourself to all of the liability of all your tenants as individuals. Now think
got it.
about that. So you have
Hmm.
to trust all of your tenants not to do bad things, or their guests not to do bad things, or their pets not to do bad things, purposely or not, or by accident,
Yeah.
by not requiring that.
Got it. So question on that. So, can a tenant also be, we're talking in a sense of residential tenants. Can a tenant also refer to like a commercial tenant? That, I mean, I'd imagine they have to carry liability insurance if they're running a
Oh yeah,
business within your, yeah,
yeah. As a business, you're basically required to have commercial or general liability anyway, especially when you're bidding for contracts. It's less of a problem, but it's still a problem. But it is very much the same. So, for example, if you own a warehouse
yes,
and you have distributors or logistics companies within the warehouse, you should require them to have general liability coverage. Along with, there's some other coverages that you should require also. They should also have protection for property rented to them. So
mm,
if they mess up something in the warehouse, their policy would kick in versus your policy kicking in. And on top of that, because nobody reads their contract, nobody really knows. Even if they did, they don't know what their contract means.
got it,
There might be provision in the warehouse owner's contract where it might not cover damage caused by your tenant because they don't have coverage.
got it. No, that absolutely makes sense. And on the smaller end, I mean, it can get as as granular as just general tenants having liability coverage, renters
Yeah.
policies along those lines. They're covering their stuff and internally what's going on in the apartment that you may not have control over,
Yeah.
and their guests.
And
Not
that's a big part of it is, let's say, just for example, somebody
yep.
has a small house party and a fight breaks out and they you did not require them to have liability insurance. Guess who's getting sued by all parties involved? It's
Mm,
going to be you.
yep.
And might also come down to a decision making, the ability to make the right decision. If it goes to court, well, the judge could say, well, you chose not to require your tenants to have insurance. Therefore, you are fully liable.
Yeah.
I'm not an attorney, but I'm
Yeah.
saying that is a possible outcome.
Yeah.
So you should
Yeah.
not put yourself in that situation. Furthermore, having your tenants get insurance that could actually also become a small income stream, or maybe not small, depending on how many units you have. You could actually turn that into an income stream if you
Mm,
wanted to. That's also an option
mm.
to a lot of landlords.
Got it. Well, you got to tell us a little bit more about that.
Sure. So, and I'm speaking uh, in the residential space,
Sure.
specifically on that side, because it's a little easier to comprehend than that. But essentially, a landlord or tenant insurance policy might cost, I don't know, 10, 15, maybe even $20 per month. And
Hmm.
there's programs that we have that could help the landlords, keep track of who has coverage and who doesn't have coverage. Somebody could get their own coverage and upload it into a portal, and the checkbox is marked they have coverage. But if they don't, you could provide them with coverage through their own
Mm,
policy, and you could actually also charge a administrative fee on top of that, creating that additional revenue stream. So depending
got it.
on what your goals are and how you manage your tenants, you could actually upcharge a little bit on the policy. So let's say you
Mm,
have 1,000 units, that could be a decent additional amount of cash flow, especially when you're looking at covering additional um, expenses or paying for property manager or changing a boiler, whatever. Those
yeah.
those small changes could create a huge revenue builders.
Yeah, absolutely. Yeah, I actually like the idea. If you own a significant number of units, it's a good way to track who is paying because everybody's paying their liability insurance or their renter's policy if you're controlling it versus relying on them to do it on their own. And
Mhm.
you not, it becomes a pain in the butt when you get notices saying this person has decided to terminate their policy and it's out of your control because you can't really do anything at that point other than tell them, hey, you have to reinstate your policy. But if you're managing it, they kind of have to just keep paying.
So it's either like,
So
so and that's a great part of these systems is, let's say somebody drops their coverage for their personal,
Mhm.
well then they have, um, it's not forced placement like you would
Yeah,
with a homeowner's policy or a mortgage company, but then
yeah,
you've chosen not to get your policy elsewhere. Where here's a policy that you are required to have. Here's how much it's going to cost, and you're covered, and the
yeah.
landlord's covered, and everybody wins.
Got it. Got it. Nice, nice. All right, no, cool. Let's keep it moving here. Um, one thing you mentioned in your form when we first engaged, you said you stated that investors should never manage their own properties. Speak on that. Tell me what you mean.
Personal view,
Yeah,
obviously, but as a business owner, I look at real estate investing as a business. And
yeah,
you have to make a decision when you're going into this game. Are you going into real estate to create a job for yourself, to maybe leave your, full-time job and create a job for yourself, and you want to manage your own properties? Cool. But if you want to get into real estate as a career and as a business, what in the hell are you doing managing your own properties? That's
yeah,
not a business at that point, right? Like,
yeah,
if you, let's say you have an accounting firm, you're not taking out the trash, right?
yeah,
Like, you're not necessarily washing the dishes because then you're not working on the business. So if
yeah.
you're managing your own property, then you're not looking at the next deal. You're not looking at
Mm,
your books. You're not looking how to scale your portfolio. You're also not meeting with other professionals that you need to create a strong network with to be able to build your wealth. So that's
yeah.
how I see it. Like, are you doing it as a job? Are you doing it as a hobby? Or are you doing it as a business? If you're doing it as a
Mm,
business and if you're managing yourself, you don't have a business. You have
yeah,
a job that you created for yourself. It's very much akin to, let's say you open up a restaurant and you do everything in a restaurant and you never open up a second restaurant, and you work 80 hours to 100 hours to 120 hours in the restaurant. Well,
yeah.
congratulations, you've created a job for yourself with a shady boss.
Mm, yeah, no, agreed. Yeah, it's definitely. I think a lot of folks, and probably speaking more on the smaller scale stuff, but a lot of folks getting to this, thinking it's going to be a business, but in reality, they're just creating another job for them when they already have a job, and they don't really value making more money in their current role and just using that as this is more of a long term play versus like, oh, I want to cash flow, and really they're hurting themselves because now they're just minimizing the current job they have that is making money and they're trying to manage property at the same time, and it's just kind of a disaster
You
for a
see,
lot of small landlords.
and this is why meetups like NEI Real Estate Meetup is
Yeah,
extremely important, because
yeah,
what are we sold on social media? Passive income.
hmm,
Get into real estate and get passive income. You and I know, and anybody watching this knows, real estate is not passive income. It is a full
yeah,
contact sport. So you need
yeah,
to find a good property manager, and we know multiple. You find a
yep,
good property manager that you trust, and you have them manage. If it was me, honestly, if I was going to real estate full time, I would find my real estate. I would find my property manager. I would find my first property and give them the keys right off the bat. I don't care if I'm cash flow neutral or negative at that point, because when you're growing a business, especially in the beginning, you are going to be negative for the first couple of years. So that's just natural course of doing business. And in
yeah,
that time, when you're not taking out the trash, or changing a light bulb, you could be looking for the next real estate opportunity, which could be in Connecticut, it could be in Wisconsin, it could be in Indiana. There's a lot of
yeah,
opportunities across the country. If you don't have the time to search,
yeah.
you're losing money.
Is there any kind of insurance liability that you could think of when it comes to people self-managing versus using a professional, property manager?
That's a great question. It's very similar
Yeah.
to the tenant insurance, because when you get a tenant to get insurance, you've created an extra layer of protection. Same thing if
Hmm.
you have a property manager. Now you are not liable for any mistakes you might make
Mm,
managing the property. That
mm.
liability is on the property manager, right?
Got
So
it.
now
Yep,
you have
absolutely.
two layers of protection. So you have,
Mm,
before somebody could attack your insurance policy for your liability. First, you have the tenant's liability. If they have a policy, you're covered. to some degree from their stupidity. If
Yeah.
you have a property manager, they have to have coverage. Well, you have to make sure they get coverage, get that certificate of insurance that shows that they do, but they have coverage. So any mistakes or any liability that they cause, now you are insulated from that to a large degree before you get hit with the lawsuit. And you're still
Mm.
probably going to get sued, but
Yeah.
you've done your due diligence. You found a property manager that has proper coverage, so you've done everything that you could in your power to put yourself in a good position. If they screw
Mm.
up, they're getting sued. Their insurance is going it should be covering that. So as long as you did everything right and you followed the proper procedures, you've now protected yourself from a lot of liability versus being direct line of fire of a lawsuit because of what you wanted to say save a couple $100 a month.
Yeah. Yep. And it's like even on all sides, whether it be residential or commercial land, property managers. I'm thinking about what you're saying now, and it's just there's so many between it be fair housing laws and just discrimination laws and this law and that law. And if you don't have good processes and you're keeping up with what's going on, you could be caught with your pants down with the wrong person versus these professional property managers. They see it every day, so
Hmm.
they know how to handle all these situations. So yeah, that's I never thought of it that way, but that makes a ton of sense. And it's a good way for me to kind of talk to some of my clients when they come in and they want to self-manage their commercial properties or multifamily, just to kind of give
Just
them some
don't do it.
perspective. And it's almost like you're buying kind of an insurance policy when you have a property manager, a partial insurance policy.
Yeah, it is.
All right. So next question. This is regarding. I have a lot of clients who, obviously have insurance, but a lot of them have complained about insurance is going up, obviously over the past few years. Some of them have had claims, which understandably is going to increase the premium at some point. But some of them say, "Hey, I haven't had anything, and my premiums are going up 20, 30%. What the heck is going on?" Can you speak on, kind of what's happening and just set expectations for people of what to expect?
So we're
Yeah.
in something I like to call the insurance apocalypse. This is the worst period of time for property and casualty insurance ever, and that's not
Mm,
hyperbole. I've talked to agents, I've talked to high up management in a lot of different carriers, a lot of different programs that have been doing this for decades, and all of them have said the same thing. This has
mm,
been the worst market ever.
mm,
Whether you're on my side, meaning the retail side, selling the products, or people getting the insurance, it's been the worst possible market. And there's a lot of reasons for that.
mm,
Um, Part of it is I believe carriers didn't really price their products correctly in certain geographical areas, which then they have to spread the risk
mm,
amongst multiple states. And it's not as simple as some people think. Like it's not like, oh, the fires in California impact our prices. That's actually not how that works. A lot of it is actually pretty regional, but it does depend on the carrier in terms of how they end up pricing it. So how it's priced varies from carrier to carrier to program to program. So there's not like a consistent theme there. So it just
got
depends
it.
on, did they make money last year? Do they think they're going to make money this year? If they were too
Ah,
successful in one year, for example, then they're going to pull back, and that's actually happening with a lot of companies in Connecticut, and we're presented with a lot of challenges. One of which is also, we were a very profitable state in years past, but because of a lot of carriers concentrated a lot of products and a lot of issuing policies, then they had to pull back because now they're overloaded in one geographical area that, oh, by the way, has a lot of older buildings,
mm-hmm.
right? We're also exposed to a lot of weather conditions. We also have hurricanes, we have snowstorms, we have ice storms.
Yep.
And also claims since COVID have skyrocketed in a lot of different areas, not only auto insurance, but also homeowners insurance and commercial properties as well. And on top of that, we have the reconstruction costs are going up. So everything that
Mm,
you could drop and fall on your foot and you're going to say, ouchie, the price of every single one of those things has gone up tremendously, right? So brick, steel, wood, anything that you need to build a house, the prices have gone up. What else has gone up? Labor. Labor costs have gone up. So the price to build a property per square foot has probably doubled in the
mm,
last 5 years.
mm.
So you're thinking about somebody, let's say, and I run into this a lot. Somebody was used to actually. I had a prospect I was working on a 5 unit apartment building in the Bronx. So this is a fun experience. He was used to paying like around $5,000 to $6,000 for his insurance policy. He went
Yep.
to his bank, and his bank guy said, "You need to shop this. You're overpaying by a lot."
Mm,
Because he had a renewal, it went up to $10,000. So I started working with him. The lowest quote that I got back was $14,000. It was ranging from 14 to $30,000.
Whew.
And his bank guy told him, "Oh, the $10,000 that you're paying was too high." And people don't understand how quickly these prices have gone up. And he would have been
Yeah.
right a few years ago, but not anymore. So we are living in a new normal where real estate investors need to start to make compromises on price
Mm,
versus protection. Where am I willing to give up some of the protection versus how much I'm going to pay out? Because if you have a full blown policy, it's going to be pretty expensive. So then that
mm,
means what? Rents are going to have to go up. And a lot of real
yeah.
estate investors are hesitant to raise rates.
Mm,
Again, something that we talked about during your meetup last time. So then you have that trickle down effect of prices of everything
yep.
going up. So there's a
Yeah.
lot of factors, and every year we're told by the industry things are going to open up a little bit, things are going to get a little bit easier. I don't see the mechanism that's going to make that happen. I see prices continuing to go up
Yeah.
for everyone across the board, especially people that are doing commercial real estate, whether it's habitational warehouses or what have you,
Yeah.
especially with the older properties. And then you have to also make a decision between what kind of coverage do you want? Do you want functional replacement? Do you just want to be able to rebuild your structure to work? Do you want full replacement, meaning it's going to get brought back to the condition that it was before there was damage, or just actual cash value, which is it was worth these bricks are worth this today. This
Yeah.
is the check that you're getting for, meaning you're going to get a lot less coverage back. So
Got it.
there's an insurance apocalypse going on. We're all experiencing it, and the real estate investors really do have to make some decisions on
Mm,
who they're working with, and also have a diverse list of insurance brokers that you're working with because we all have access to different markets. I'd like to think I have probably the largest scope of carriers I have access to, but I don't have all of them, right? Like I don't
got it.
have a State Farm, for example, but State Farm a gentleman might not have the carriers I have. So also don't assume that your agent has all the answers.
Got
Have
it.
these conversations and have a good network of people that you're working with.
Kind of getting out of the insurance talk, when you're not selling insurance or helping your clients with insurance, what are some of your hobbies? What do you enjoy doing? I know you said your hobbies is work, but what do you do other than work?
It's funny. This is a very cliche answer. I've always rolled my eyes when people said this, but spending time with my family.
No, that's what it's all about.
I don't really have time for much else. So the
Yeah.
ability to spend time with my family is fantastic. Like the businesses that I'm in, I'm lucky enough to have what I call a lifestyle business. Right, I
Hmm.
work when I want to work,
Yeah.
which allows me to find those pockets of where I could spend time with my son and my wife and my four dogs,
Yeah.
and then on the weekends work on the podcast studio. So I do have a lot of interest, and I'm lucky enough to where I'm able to pick at a lot of them, but definitely spending my time watching my family grow has been tremendous.
Got it. Absolutely. Good answer. Where could people find you or get a hold of you?
So you can find me in a couple of places, most notably since this is insurance talk, www.myinsurect.com. That's our website. You
Yeah.
could request a quote there. We have a full range of blogs, so we have a lot of great topics on our blog posts. And if anybody wants to reach out to me and suggest a blog post or something that they want to learn about, I'd love to craft that with them. On the wealth management side, mywealthamerica.com. You could also find me there. Instagram, Facebook, LinkedIn, and your local NEI networking meetup.
That's it. You're the man. And then lastly, before we take off, any final words you have for the audience?
Yeah, just stay grinding. Develop the habit of working hard. I have found that the best way to combat laziness or overcoming your obstacles is developing the muscle of hard work. And basically,
Mm,
my mantra is do what's hard. If you're
mm.
walking by something that's laying on the floor in your house, it's been there for 3 weeks. Well, damn it, you're lazy. But if you force yourself to pick it up and you do it again and again and again and again, you're going to
Yep.
develop that muscle of working your ass off, and you're going to love working your ass off. And that is the best key to success.
Okay. Good stuff. All right, Tom. Well, thank you for joining us. To our audience, thank you all so much for joining us of another episode of The Agent Investor. We want to wish you all the best in your health and happiness, and hopefully we'll catch you on the next episode. Thank you so much, Tom. Thank you to everyone, and we will catch you all later.
Thanks for having me, Brandon.
Absolutely.